Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, Sebi recently introduced amendments to the REIT regulation of 2014, outlining provisions for small and medium real estate investment trusts.
Fractional ownership of real estate and fractional ownership of infrastructure is where the strength of the country will lie.
And the Sebi chief believes that investors need to positively consider assets such as REITs, InvITs and municipal bonds.
You can now, without worrying, you can think about investing in these products.
So what really is this fractionalization of REITs or sachetisation of REITs? Let's understand that today with Dhirendra. Welcome, Dhirendra.
Thank you.
Let's begin with, what this sachetisation of REITs is all about that the Sebi chief mentioned in her address to the media.
That is what any collective investment vehicle is about, whether it be ETF or a mutual fund or a real estate investment trust or, infrastructure investment fund. Any mutual fund design or a collective investment is pooling of investments, and then you become a fractional owner of something. Even a company's stock is a fractional ownership of stock.
Right.
You own a small part of the company. So in that sense, real estate was real estate investment trust is fractional ownership of real estate. Earlier, it was not possible to have a residential real estate. When we think of real estate, we think of a house. And when you think of a real estate investment trust, house was not part of it. There was a commercial building, and it should be a rent yielding commercial building.
Right.
Which was part of it because of the scale, because of the size, and because of all the stipulations of the regulations for that. Now it is possible to have a small sized fund which will pool investors' money and go about buying assets, go about buying commercial and residential assets. And then it can be in turn owned by investors. And there are a new set of norms which is more liberal, so to say, that special purpose vehicle which will create this, which can own these assets, can actually borrow money, can leverage up to 49%, which means that if they are buying assets worth 100 crore, all they need is 51 crore. So they will be benefiting on the appreciation or the rental yield on assets of 100 crore. Then so that leverage is possible. Having residential real estate, and the scale can be smaller. So these are the big difference. And so most people aspire to have. Everybody has an understanding that real estate is a great investment because everybody has heard that story. It sounds real, because everything else looks as if, you can't really feel the company when you own the stock or, of course there's a company. But this is a physical infrastructure and people can relate to it. And so in that sense, it's an aspirational investment. Everybody thinks, but it is not possible to have it unless you go through all the headache of owning a real estate. So this makes it even approachable now.
Okay, so that's the difference between REITs and SM REITs.
SM REITs.
Can you tell us what are some of the limitations and advantages of these SM REITs?
Advantage is that, it becomes approachable. Earlier, it used to be a very large projects, only commercial, and a ticket size was different. So today, I feel that, going by the scale of it, that maximum 500 crore and a minimum of 50 crore, it will be possible for a builder to create a REIT, create a property, asset of 100 crore, funding it to some extent, 51 crore from investors, borrow 49 crore, and get it funded by 200 people, 300 people.
A minimum of 200 people.
Yeah, a minimum of 200 people. So 200 people, 300 people can actually go about owning it.
Right.
And depending on the scale, so it becomes approachable. A pooled investment becomes possible. It is a high value asset. For me, the ticket size could be very different. An individual can at most, 1 crore, 5 crore. And, that will also be a very high value thing. In here, with your small money, you can actually spread your investments. Diversification, which is the key benefit.
With 10 lakh?
With 10 lakh, you can diversify your investments across multiple assets because it will actually you will be owning multiple assets and a part ownership of that.
Right.
Then, real estate, the point is that, you have two revenue streams. That is in case of stock as well, but not necessarily always. In here, it is quite meaningful. that the rental yield which gets translated into dividends. And then periodically, if the prices are reset because the asset gets valued, if this building was worth 100 crore, 3 years from now it is worth 150 crore. There is a capital appreciation as a result of that valuation.
Right.
And meanwhile, you have got your rental yield on account of that. And of course, it comes with its management fee.
Right. And some of the limitations, if you can list out.
It is that, real estate comes with all the underlying risks. There could be vacancy, real estate, maintenance, vacancy, and it is subject to all kind of market volatility. Commercial real estate, where early days of COVID, that was the worst hit, and it was actually worst hit not only in the market, the listed REITs, but the real REITs, because since then, the work from home and the whole dynamics of the real estate or the commercial real estate changed forever.
Right.
Maybe it has not been devastated, but these are the standard market risk, or which you are exposed to always.
All right. So if I had to buy a real estate, a property with EMIs, should I go for that or rather, invest in these SM REITs?
Irrespective of, these REITs coming into being. This is right now at the regulatory approval stage, and we have to wait for it to come around. But I would say that my approach has been pretty straightforward. Go for a home, and if you're going to live in that home, by all means, and there you can actually leverage more. You can put 15%, 20% and borrow 80%. And if you can save on that rent, and pay that EMI, that makes it worthwhile. Besides that, the emotional comfort of owning a home, which is yours. And once you are done with that, once you are done with the EMIs, it's all yours. So you have multiple benefits going on. Go for that. But looking at it as an investment, these are early days. Let's see how it comes. And also, I feel that these SM REITs may not be available to all investors. This will normally be, a sponsored REIT by a builder, and because you need a small set of people and they have to buy into it. They need, trust is still a big component of the real estate transaction, whether it be buying a home or buying an apartment, ensuring that you get the delivery, and you need to see that, how much skin in the business he has. Is he a sincere guy? Is he a guy with a track record? And all those things can't be done with a stranger. So I think it will still be a very small.
But with these regulations coming in, won't the trust issue be taken care of?
Trust issue will be taken care of in the sense that everybody will comply with it. But the standard is inherent risk of of a real estate project, and somebody who has a great track record of implementing it with rigor in time. That actually still is a material thing, and that is the success factor. Besides that, I think, regulations will only ensure that you are complying with all the basic things. It is unlikely that, with these regulations, it is not possible to have a real estate investment trust of a small scale without having the property. When you go about buying your own real estate, sometimes you are buying something which is not even RERA approved. Sometimes it is not even sanctioned. Sometimes the construction starts 10 years after you paid you started paying your EMI without the signs. The biggest builder of this country.
And this we're talking REITs, we're talking about completed rent-yielding property.
Rent-yielding property. Besides that, real estate is a very disappointing story. Real Estate Regulation Act is not a very old story. But let's not forget that, the country's leading two largest real estate brokers or builders, real estate companies, owners or founders, they are in jail for last 5 years.
Yeah. So do you believe that REITs in their present form are a good source of, regular income? Can one depend on them for regular income?
The existing one looks attractive, but not extraordinarily attractive. It's decent. And these small REITs, we have to see how, what shape it takes. It will be a very interesting thing. I'll be keeping a very keen watch on that. Also because, it will not be available to everybody. It's, 200, 300, 400 customers, or investors with a large ticket size are the only prospect, and that will actually keep it going.
All right, so basically you're saying that people must wait it out, see how it rolls out, and
let
then
it roll
probably
out, yeah.
venture in.
It will be very interesting. It will, and I'll be quite looking forward to it, because there is one thing which is very attractive, whether it be any kind of REIT or real estate, that the rental yield can be inflation adjusted,
Right.
and that could be the charm.
Before we wrap up this episode, there's a viewer's question that we would like to answer. Now, Ravi says, infra-sector funds have consistently performed over 3, 5 and 10-year periods, and they are 5-star funds too. So is it okay to have 25% allocation in them?
Maybe if you like it, if you understand it. But let me tell you that, I normally avoid any kind of sectoral or thematic fund, because nothing prevents a general fund to be tilted to infrastructure. But no infrastructure fund can actually become a generic fund. This has to necessarily. At the same time, I dislike infrastructure fund because of extremely disappointing initial years. These funds became popular in the period 2005 to 2008. That is when, there were companies which were launching their 5th infrastructure fund, this infrastructure, and that was the time when they were actually going up ballistic. And every new fund company was launching a new infrastructure fund, and investors were pouring money. And ever since then, the initial 5, 6, 7 years of these funds were the most disappointing one. Now that period has slipped out of the 10-year period, because these funds got started in 2005-06. So last 10 years look good, but I still can't forget the disappointing days of investors who came with huge expectation and they were disappointed. And also I dislike that loose definition of infrastructure fund. If you look at Sensex or Nifty and look at the 50 companies or 30 companies, why I dislike it? Because the loose definition of Sensex of infrastructure makes it possible to invest in Nifty without IT companies and without pharma companies, and that is the infrastructure fund. It is so loosely defined. So if you don't invest in if you invest in an infra fund, which excludes pharma and which excludes IT, that is it. That is the infra fund for you. So I don't see the novelty. Yes, it has done well. It has done well simply because they became smaller. The other is that he's referring that they're also rated. Any fund category which has been in existence for a long period and has 10 funds with 3-year history will get rated. That is our quantitative methodology. And top 10% or top 12.5% of any category based on risk adjusted performance gets a 5-star rating. So if you have these many funds, you will have 1 or 2 of them. And some of these funds are good, are impressive. So you can well consider them, but understand these are the constraints.
All right. Well, hope Ravi that answers your query. That's all we have for you in this episode. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.